Okay, so we had uh, we had all the major earnings yesterday or this week. Just finished up, and today is Friday, October 31st. So we can look at Amazon real quick just to get this out of the way. Uh, it's up at 250, 246 right now. All the shares that we had acquired going back in, where is it? Here. What is that? Early October. All of these shares I sold yesterday after earnings and the break of new all-time highs. So that would be here, like 245 or so on AMZU. Sold all of these as well. Um, Break here and just sold right at earnings. As soon as earnings came out and as soon as it was announced, I just sold everything off here at the break of all-time highs. So exited Amazon, and we're done with that. We can go through these real quick. Apple, still way too high. Nothing really interesting there. Google, still too high. Nothing there. AMD, still too high. Just kind of getting through these because they're I already know they're all too high. Tesla, you know, too high at the moment. So now we can get into what happened with earnings and what I'll be buying going forward. We also have Goodyear Tire coming next week and Rivian coming next week here. So Rivian and Goodyear Tire. Obviously, my average is in this area here, uh, somewhere $13 ish on Rivian, and where is Goodyear Tire? Like an average of $7 on Goodyear Tire, in this area. Just buying for the last couple of weeks as it's been down in preparation for earnings. As soon as earnings comes out, I do plan on unloading Goodyear Tire and Rivian, which is something that looked really good to me going into earnings. As soon as earnings is done, I'll be unloading Rivian and unloading Goodyear Tire to make room for Facebook and Netflix. Um, they were the big losers coming into earnings. They kind of got obliterated. So, we'll go over that, and just right off the bat, I'll tell you that this Meta is immediately what I'm going to be buying every Friday for probably the next 12 weeks, at least until next earnings, which is going to be January of next year, 2026. And then, depending on how they perform and how they build out, how this rotates around and comes back up, it may be January of next year, or it might be April of next year, which would be like 2 quarters from now or 2 earnings releases from now. But regardless, Meta is at the top of my list, and then Netflix is also going to be something that I buy. So we can get into these real quick. Since we're on Netflix here, um, it's been down because it had earnings a week ago here at 587, and just dropped down. So I just been buying this. I bought some today. It's Friday. I was waiting for all of the earnings to come in and then start buying Netflix. So buying in here. Let's look at 1163. So let's go ahead and draw the line there. Price this out here. If Netflix stays under 1153, so call it 1160 for easy math, just nice little rounding. We're going to target this gap fill, and everything below here we just want to be buying every Friday. We'll just buy this, and we are about 1.5 standard deviations away. It's just a really good price and a really good offering and opportunity for Netflix. If we go to the 3-year 1 week chart, we see a consistency of Netflix building upwards. It has a strong upwards trending chart. So we're just going to go ahead and jump in on this on the big dip. Um, there is also news for Netflix that on November 17th, it's going to do a 10-to-1 stock split. So if we pretended like today is November 16th and the price is 11.23, then the next morning, Netflix is going to be trading at $112.30. They just divide the stock price by 10, and then if you had one share of Netflix, you'll wake up and you'll have 10 shares of Netflix. So that's a 10-to-1 stock split. The reason and purpose for it is because it's getting too expensive for retail buyers to be able to purchase it at a decent price, because people will look at this and say, oh, it costs $1,000 to buy it. I don't have $1,000, so I'm going to go buy something else. It's more of like a psychological thing. And so they're going to drop this down to $112. And now a retail buyer looks at it and says, $112, I can afford that. I'll go ahead and buy it. So they cut this down. I don't know if they've had a stock split in the past. If I go back like 10 years, it doesn't look like it. So this is going to be their first stock split. If we look at, like, I know Apple has had some. If we look at Apple back here, they did a 4-to-1 stock split. And then there was one back in maybe like 2011, if I remember right. Oh, back here, 2014. They had another stock split that was, I think it was 7-to-1. Yeah, 7-to-1 stock split on Apple back then. Kind of what this represents on the chart, if we were to look at Apple, is that, what is that, 15 years ago, they were trading at $10.63. But the reality is that they were never actually $10.63. They were like $700. They did a 7-to-1 stock split, so the entire chart changes and makes that adjustment. But back then they were $700, and so for this progression of all these years, people had to buy Apple at $700. Then they just split it down 7-to-1, made the stock price $100. It makes it more accessible to regular retail buyers. And then as it progressed and it got too high at $109 here, but that would have been back here at the 7-to-1, it was $100. So this would have actually been $700 again. And when Apple hit $700 again, they announced a stock split and split it down 4-to-1. So call it $170 ish. So they split it down, and now it would have been $170. It's more attainable and more accessible to retail buyers instead of it being $700 again. And now today it's at $271. So if we were to just speculate on Apple, the next time it reaches $700, they'll probably do a stock split again and shove the price back down to $200 to $100 at a 7-to-1 or a 4-to-1 stock split. But that's what Netflix is doing. They're going to do a 10-to-1 stock split from 11/21. So on November 17th, this price is going to say 112, and if you had a single share of it, you're going to wake up and it's going to have 10 shares instead of 1. So you have the same amount of money. The price is now just different. Oh, so let's come back to 3 or 1 week. So that's the news for Netflix, to understand that there's a split coming. And just based on their chart, it continues to climb, it continues to grow. It looks good to me as far as how far it's come off of its average. So if we buy, where's that 1 year, 1 day? If we buy everything every Friday on anything under $11.60, then we know we're getting a really good price. And we can target this gap fill up to $12.50 as like a near term profit range, that it's going to be our holding period. We just buy everything under here. We hold through this gap fill and know that we're minimum going to make this much, $12.50, and then maximum potential, we're going to be up here somewhere at $14.50 to $1,500. So if I draw these out on just its expected trajectory, just based on its history, if I draw this out and I take from just somewhere back here, and we're going to draw this all the way out to 1,500, then we could reasonably expect by October 19th of 2026 to reach Netflix $1,500. So everything we buy down here, if we hold it for a year, we hold it for 12 months. This time next year, expect Netflix to be around 1500. If we set that as our upper limit price target, then as this historical price came above the average, this historical price came above the average, that we could reasonably expect Netflix to come back above the average and hit that 1500 price target sometime before October. It might be in the summer, it might be in the spring, but some some big momentum move that carries it up above its historical average price and gets us that $1,500 before 12 months. But you could also just reasonably expect that in a year's time, this is going to reach 1,500. So good pricing here at, uh, what was that number? 1160. And then by November 17th, we're just going to call it $116. So anything sub 116, and we're going to sell it at 150. That's the target, and that's the goal. If we hit these upper limits, then that's I mean, today, if we just hit it today for no reason other than for make believe, if we hit it today, it would be 1450. If we hit it out here, that would be January 12th, 2026, which will also be in time for next earnings. We could realistically see that $1,500 mark or that $150 mark by January of 2026, next earnings. So anytime between January and October of next year, which is a huge gap, but guaranteed profit is just guaranteed profit. So it's easy to extrapolate it out like that and say between January and October of next year, expect to see 1,500, and whatever that percentage comes out to, that's how much we expect to make. On Nfxl, this is going to be Netflix poor people. It's going to be poor people's Netflix. Expect about $75. When this was translated over from Netflix, the last high was 73.71. That's like 1340 on Netflix. So just plan on that general area, somewhere 74, 75. But if we were to carry it out to here, it would be about $85. So that means that if we are paying, let's put this on the gap there. If we're paying sub 52 on Nfxl, you're expecting a return all the way up to 75 to 85, which is going to be about a 50% return. So if you're buying Nfxl, expect about a 50% return, and we can just carry it all the way up into at least January and see what it's doing then. But that's basically coverage of Netflix: is buy at this opportunity, sell somewhere north of 75 all the way up to $85, or on Netflix, buy sub $116 and sell somewhere north of 150. That general area, and that percentage return is going to look really good. If we pull up Meta now, we can go to a 3-year, 1-week chart just to cover it a little more thoroughly. If we look at Meta or Facebook's chart, again, it's consistently traveling upwards. It's a very strong, growing company, and their ad revenue is consistently growing year over year. So if we look back at 2022, first quarter earnings were $1.76. 2023's quarterly earnings were $5.33. If we bounce back and forth between quarter and quarter, it was $1.76. Now it's $5.33. Then it was $8.02. The next quarter also grew. It was $2.20, then $4.71, and then $6.43. The numbers each quarter just continue to get bigger, and then the yearly added, if you put all their earnings together, then year over year, it grows exponentially. It's roughly 20 to 30% growth annually from Meta, and it hasn't changed in 3 years' time. If I was to go back even further in the chart, it's just a solid, strong, growing company. Now, the earnings from yesterday, Wednesday, I think, the earnings from Wednesday came in at $1.05. But that's not a real reflection of what happened with Meta because their actual earnings were $7.25, which beat the expectation of $6.68 and beats the previous quarter of $6.03 and then the year before that at $4.39. So their earnings, what they actually did as a company, exceeded all of the expectations and continued to show their 20 to 30% growth quarter over quarter and year over year. What this $1.05 represents was a tax that they had to pay. They had to pay $16 billion, and so it took away from their technical earnings and is just reflected here as $1.05, which is what drove the price down. Now, I don't care so much about that because the 725 in earnings just proves they didn't do anything different and they just continue to grow. So I expect this chart to just continue to do exactly what it's been doing for the last 5, 10, 15 years. It's going to continue to be Facebook. It's going to continue to generate ad revenue. And, we're all going to keep scrolling through and seeing all the little ads and marketing sales things that happen on there. They're going to keep making money. It's Facebook. So I'm not worried about this $1.05. And in fact, I'm the opposite because the true earnings was $7.25. January earnings is expected to be about $8.60, which, if we were to pretend it's out here, and then this was the previous one from that was 802, the previous one from that was 533, and the previous one from that was $1.76. It's just continual growth, quarter over quarter and annually, year over year. And next year it's going to start its year at 860. Realistically, probably beat it again because it always beats expectations. It'll probably be closer to $9. But I don't even have to speculate it. I don't have to get into the nitty gritty of their earnings report or their dissection of their financials. I can just look at the chart nice and easy and say, yes, they grow. It trends upwards. This is a massive dip, and I'm just going to buy the shit out of this. So Meta is my number one priority right now. And I plan to buy all the way until next earnings, January 28th. So I'm just going to buy every Friday all the way until January, with the expectation that it's going to, it should have been about 800 to 829 this earnings, and by time it gets to January, it should easily be 850. So if I plan on that, let me get back to the yearly chart. We have a gap to fill. The gap is starting at 685 all the way up to 743. And I had covered this region a couple of weeks ago, where I said that if Nflx ever came into the 660 range, down here, that would be where I was looking to buy. If it was sub 660 all the way down to potentially 600, I didn't know if it would ever actually get there, but if it ever even approached that region, I'm immediately going to start buying. And then we woke up after earnings and it's down there, and so I'm just immediately jumping all over this. Anything sub 60, I'm actually going to go all the way up to 720. It was just underneath all of this support here. So if I just throw that mark in there, it's about 700. I'm going to go all the way up to 720. Oh, let's throw that in there. So anything sub 720, I'm just going to buy all these Fridays for the next 12 weeks going into next earnings. If Facebook is under 720, I'm going to buy it every Friday. I'm going to be buying this heavily, as if it was AMD from last year. I don't care how long it stays under. It makes no difference to me how long it stays under. If it's 12 weeks or 24 weeks, I'm just going to keep buying every Friday, regardless of news or information coming out. It makes no difference to me. This price area, one standard deviation away, right in this fillable area where the blue comes out of the green, I want all of this, so every Friday I'm just going to buy it. There are gaps here. That's what that 600 represented, was that there was a gap here to fill where we could potentially see it go from 648 all the way down to 620 and fill the gap down at 605, and then a much lower gap at 570 all the way down to 550. Again, that doesn't actually mean we're going to go down and fill those, but they are targets, and something to just keep an eye on is that if it keeps falling, we could see all of these gaps get filled. Doesn't make a difference to me. I'm still going to buy it. And if it does go all the way down there, then that's why I buy on Fridays every week, because then I get an average price, and by time it starts to curl around and come back up, my average price will end up somewhere. Let's pretend it went all the way to 550. My average price would end up somewhere down here at 620 to 500 or 575. That's all speculation, but it's why I buy every Friday. So I did buy a chunky bit here, but I wouldn't recommend just dumping an entire account here at 650 because there are potentially more downsides. And so I prefer to buy a small chunk and then average in week to week every Friday. I just average in until it starts to rotate up, and then I'll just keep buying it until we get over 720, and then I stop buying. All of whatever it takes to get all the way back up to 720, I'll take all of it every Friday. But as soon as we break over 720, I go into hold and I just set it to the side and say, "Call me when you're 900." I'll put a little notification in there. Say, "Call me when you're 900. I'll be ready to sell." So holding somewhere between 720 and 900. But all of these for the next however many weeks it takes to climb out of this gutter, I'm buying every Friday. So that'll be Meta, and on METU, METU. On METU, kind of the same thing. The chart doesn't go out as far as that, so I don't exactly know how far it'll be. What is that? That's 479. I'm just trying to translate this over. What was this price? That was 430.25 and 510.25. So 430.25 is going to be here at METU $22. We can fill that, and we can fill this gap here and this gap here. So there are three gaps here at $31, $26, and $23 that we could see get filled. And I'll just be buying the entire way down if it decides to go there. But we could see a bottom somewhere at 23, or we could see a bottom out here and just start tracking sideways. Either way, I'll just be buying the whole thing. So for METU, that is to anything under 40. So let's go ahead and put that in there. Now we have a line across at $40. And if METU is anything sub 40 for however many weeks out it stays under there, I'm just going to buy it. Meta and METU, I'll be buying both at anything under 720 or anything under $40 on METU. And then look to carry METU up through this gap fill at $43 and all the way up to new all-time highs, carrying to... Oh, I need a larger time frame. Again, I need bars to the side. Yeah. If I need to go to Meta first, but that's okay. So if I draw this out on its historical trajectory, I draw this out all the way to the end of next year, and I'm going to put this, where is 12 months, October, it's roughly going to be there. Let's draw this one up. We're going to shrink this. Okay. And then we'll draw this one across. Right there. So what is that? $55. So roughly, yeah, just call it $55 is the planned sell target, and anything under $40, where the current price right now is 32, it could round out all the way down to 22, and whatever our average ends up with at the end of all of those weeks, plan to sell for 52, which would end up being a return of about 40 or 50%. So that's the plan. That's the plan for Meta. And let me draw this. It should actually carry much higher than that. Oh, I need the 3-year 1 week. Okay, historical trajectory there takes that to $1,000. Yeah, it's going to be so much more than 52. What does that get us? Okay, plan to sell Meta at 1,024, so or 1,023, so call it 1,000. Um, Plan to sell Meta at $1,000, and let's try to figure out how much that would be. It's going to be 644 current price, $800 all time high. Just like call it 350. It's a $350 move, and so let's just say it's going to double that, just for really bullshitty math. But we can actually get it figured out when that actually happens. So from $32 to $52 is a $20 gain, and so we'll throw another $20 on top of that and say our sell target for METU is going to be $72. That's really bullshitty math, but as it starts to rotate out and come back up, we'll get a better understanding of how Meta and METU prices translate back and forth. But that's what I would target, is somewhere like $72. Somewhere way up here after after we see it start to climb back above 720. So after it climbs back above 720 and we actually start to really figure out what the profit's going to be, we'll get a better understanding of what METU is going to become then. But yeah, that's kind of it. Is just every Friday buying Meta and every Friday buying Netflix, and I am more heavy on Meta than I am on Netflix. So yeah, that's the video, and you know, gonna do this all the way until at least January. Until at least January 28th for the next earnings cycle, and see where we stand then. But this will be just a really good buying opportunity, very similar to AMD from last year. So yeah, that'll be it.